stocks and sectors that we have to discuss. We do have with us Lavina Quadros, who's the capital goods, logistics and utilities analyst at Jefferies, joining us now. Lavina, always a pleasure speaking with you. Just the obvious question, because over the last 6 months or so, ever since the budget was announced, seems like things are moving from capex to consumption. And with this GST cut coming in, etc. as well, do you think that reduces the elbow room for the government to invest further in capex and add more to consumption? In light of that, how does the sector look over the next 12 to 18 months, and what do you think is still backable?
Firstly, good morning and thank you for having me. Just on your question, very, very relevant, right? So yes, post the elections last year and especially in the budget this year, right, we saw the government discussing a focus more towards consumption versus capex. So you have seen a slowdown in the capex cycle. However, you are seeing certain pockets of capex doing exceptionally well, right? So for me, if I look at the overall capex cycle very top down, you have end markets of power, you have end markets of defense, which are doing extremely well. But outside of that, very fair that even if you look at the spend of the budget, right, earlier capex spend, let's say particularly between 2021 to 2024, the budgeted growth for capex was 15% above, let's say on a CAGR. And now you've come to a point where what's being discussed is a medium-term CAGR where the capex to debt, capex to GDP ratio will get maintained. So probably implying closer to 8 to 10% industry-wide CAGR. But again, like I was highlighting, if you're in the right end markets and in the right pockets, there's still opportunity to do very well on a stock-specific basis.
Hi, Lavina. Good to see you in and finally have you on the show. Well, expectation is that consumption will pick up, right, in the second half of this fiscal. That's because of GST 2.0. Do you think finally that long-awaited private capex push, now they don't have an option, they need to show the money and need to lend support. Do you think that's in the offing?
So again, very interesting you asked this question, right? So I'll tell you how I'll put it. While there's a general perception that private sector capex is not doing well, again, in private sector capex, if you look at pockets, right, power, a lot of the capacity is actually being set up by private sector, larger corporate groups, mid-sized groups, smaller groups. Housing as a capex end market is continuing to do very well, which is highly private sector driven. If you look at data centers, PLI linked schemes, again, all of over there, private sector capex is doing very, very well. There are a couple of larger corporates who have also commented that they are seeing some revival on the private sector capex side. So again, it's back to end pockets. Broader level, I think private sector capex to pick up in a very, very big way is going to take time, because if you just think about industrial capex as a whole in India, right, a lot of that goes into oil and gas.
Oopsie.
We also require a big infrastructure push. So as infrastructure push slows down a bit, you'll find that capex in those areas will also.
All right, we're just trying to repatch that connection. It's slightly unstable, but I think we'll get Lavina back. Meanwhile, just keep an eye out on the market. Okay, Lavina, I think you're back and on a stable connection. So continue your point.
Oh, no. I was just saying that as private sector capex again in pockets is picking up. Broader based is going to take longer because again, broader based, if you think about it, you need investment in cement, steel, oil and gas, and a lot of that also needs a bigger infrastructure push.
Got that. So let's get a little more specific then. You did say that defense is doing well over the last few years or so. The ordering activity has picked up. The indigenization theme has come by. We've seen that movement in a lot of these defense-focused stocks as well. If you had to back some capex themes from here on, which ones would they be? Would you look at domestic companies, capital goods companies? Do you look at some of these MNC conglomerates? Or, are there any other specific areas where you would, as much as individual stock names you can take, if you could give us a sense?
So I'll tell you what, I'll discuss business models here. I'm not in a position to really discuss stock recommendations. But let's say in power equipment T&D market, right, you do have companies that are present over there, like let's say Siemens Energy, you have a Hitachi Energy, you have GA Vernova T&D. Those are companies present in those sectors. In defense, you have the larger names like an HAL, a BEL, for that matter, even the shipbuilders and smaller companies like data centers and so on. So these are companies, of course, you'll have to have a look at valuations and then decide which investments make more sense than others. But you have these host of companies which are in the right end markets. Data centers is a very interesting area. I mean, in data data centers, again, you have beneficiaries in your power equipment names. You also have beneficiaries in your automation names. Companies and ABB present, Siemens.
Okay. All right, Lavina, I think we've got you on a bit of a scratchy line, but thanks a lot for joining in. We look forward to having a longer chat with you in the time to come. But for the time being, we got a broad gist of what you had to say. By the way, the market